The average health insurance premium in 2026 is almost $700 a month for an individual. For a family, it's significantly more. And depending on where you live and what plan you pick, you could be looking at $800, $1,000, even $1,500 a month before you've seen a single doctor. If you're buying on the marketplace without subsidies, you're absorbing all of it. So when someone tells me they're spending that kind of money and they're a healthy person or a healthy family who rarely uses the system, I tell them there's something else they should look at. It's not health insurance. It's called a health share. And it could save you hundreds of dollars a month while still giving you a way to handle major medical expenses. If you don't know who I am, my name is Jim Eddington, and I run an independent insurance agency called Western Pacific Insurance. We're also an affiliate of Zion Healthshare, which means if someone enrolls through our link, we receive a referral commission. I want to be upfront about that from the beginning. And the reason I talk about it on this channel is because the people watching our videos, homeowners, landlords, business owners, tend to be healthy and financially responsible. And they're tired of paying massive amounts for health insurance they barely use. So let me walk you through what a health share is, how Zion Healthshare works, and who it's a good fit for and who it's not. A health share is a community of members who contribute monthly to help share each other's medical expenses. It is not insurance. That's an important distinction, and I'll say it more than once. A health share is not an insurance company. It's not regulated like insurance. It doesn't operate like insurance, and it doesn't use the same terminology. Instead of paying a premium, you pay a monthly contribution. Instead of filing a claim, you submit a sharing request. Instead of a deductible, you have what's called an initial unshareable amount, or IUA, which is the amount you pay toward a medical need before the community begins sharing in the cost. And instead of a carrier deciding who's covered, the community shares eligible medical expenses based on member guidelines. The health share model has existed since the 1980s. Today, there are multiple health share organizations across the country, some faith-based, some not. Zion Healthshare, the one we're affiliated with, is not faith-based. There's no religious requirement to join. You become a member of Zion Healthshare and make a monthly contribution. Your contribution amount is based on your age, your household size, and the IUA level you choose. As of early 2026, individual memberships start as low as $114 a month. Family memberships start around $295. Compare that to $700 or more for an unsubsidized marketplace plan. You choose your IUA. Zion offers 3 options: $1,250, $2,500, or $5,000. The higher the IUA, the lower the monthly contribution. This works the same way conceptually as choosing a higher out-of-pocket responsibility in exchange for a lower monthly cost, except it's per medical need, not per year. When you have a medical need, an injury, illness, surgery, or hospitalization, you submit a sharing request. You pay your IUA for that specific need. Once it's met, the community shares 100% of remaining eligible expenses based on the membership guidelines. There is no annual or lifetime maximum sharing limit built into the program guidelines. The IUA is per medical need, not per year. So if you break your arm and your IUA is $2,500, you pay $2,500 toward that injury and the community shares the rest. If 3 months later you need surgery for something unrelated, that's a separate medical need with its own IUA. But Zion caps it. No household is responsible for more than 3 IUAs in any rolling 12-month period, so there's a ceiling on your annual out-of-pocket exposure. Once your IUA is met for a particular need, you don't pay another IUA for that same need unless you've been symptom-free for 12 months. So ongoing treatment for the same condition doesn't keep resetting your responsibility. For preventive care, certain preventive services like annual provider visits and screenings are eligible for sharing without meeting your IUA first, subject to the member guidelines. For telemedicine, members get unlimited access to virtual primary care visits. If you have a minor issue and want to talk to a doctor without going to a clinic, that's available. For mental health, this is important to understand. Expenses related to mental health treatment and medications are not eligible for sharing through the community. However, members may have access to acute counseling sessions through Primaston Care, which is an additional virtual care service available to any household membership. For prescription discounts, Zion offers a discount program called Zion Healthshare for direct members, with savings on generic, brand name, and specialty medications. There are no network restrictions. You can see a doctor, any hospital, any specialist. No referrals required. You choose your provider. But because a health share isn't insurance, some providers may ask you to pay up front and then you submit the expenses for sharing afterward. Health shares are not for everyone, but for certain people, the savings are significant and the trade-off makes sense. Healthy individuals and families who don't use the healthcare system frequently, if you go to the doctor once or twice a year for checkups and you're paying $700 a month for a plan you barely use, a health share can cut that cost dramatically while still protecting you against major medical expenses. For self-employed individuals and small business owners, if you're buying health insurance on the individual market without employer subsidies, you're paying full price. A health share can reduce your monthly health care cost by hundreds of dollars a month. For people between jobs or in transition, if you need something to bridge the gap between employer-sponsored plans, a health share is an option. And unlike marketplace plans, there's no open enrollment window. You can join year-round. For families with young children who are generally healthy, a family paying over $1,000 a month for marketplace coverage they rarely use beyond well-child visits could see meaningful savings. For people who value choosing their own provider, there are no network restrictions. You pick the doctor, you pick the hospital. That's a real advantage for people frustrated by narrow networks on traditional plans. But a health share isn't designed to replace health insurance for everyone. It's an alternative model that works extremely well for some people and poorly for others. My goal here isn't to convince you to switch. It's to help you understand how the model works so you can decide if it makes sense for you. A health share is not insurance. It does not come with the same regulatory protections as health insurance. There's no guarantee of sharing. The community shares based on member guidelines. Health sharing as a model has been around since the 1980s, and Zion has been operating since 2019 with a growing membership base. But it's important to understand that this is a voluntary arrangement, not a contractual obligation like an insurance policy. If you have significant ongoing medical conditions that require extensive treatment, traditional health insurance may be a better fit. Zion does share eligible expenses for pre-membership medical conditions, but there's a phase-in period. Year 1 is a waiting period. Nothing is shared. Year 2, sharing is limited to $25,000 per sharing request. Year 3, $50,000. Year 4 and beyond, $125,000. The max resets each membership year. If you need immediate support for a chronic or serious condition, a health share may not meet that need right away. If you receive substantial marketplace subsidies that bring your premium down significantly, the cost difference between a subsidized plan and a health share may not be as dramatic. Run the numbers for your specific situation. And if you're someone who wants the legal protections and regulatory framework of traditional health insurance, a health share is not that. It's a different model. It works for a lot of people, but you should understand what you're choosing. Zion Healthshare is a nonprofit organization. Contributions go towards sharing member medical expenses, not towards shareholder returns. One important note on state requirements. There is no federal penalty for not having health insurance. Check the exemption rules or talk to a tax advisor before making the switch. And one more thing, a health share is not regulated health insurance. It does not meet Affordable Care Act requirements. It does not guarantee payment of medical expenses. Sharing is based on member guidelines and the availability of community funds. You should carefully review those guidelines before enrolling and make sure you understand exactly what you're signing up for. If you want to see what your monthly contribution would look like, there's a link below. That's our affiliate link. It takes about 30 seconds to plug in your household information and see those numbers. Zion Healthshare is available in every state and territory where it's legally allowed, so no matter where you are, you can check it out. They also have a live chat on their site if you have specific questions about how the membership works. If you want to compare it against traditional health insurance, that's the right way to think about it. Compare the numbers and decide what works for your household. And if you're the kind of person looking at a health share, you're probably also the kind of person who should be looking at an umbrella policy or making sure your rental properties and entity structure are insured correctly. We've got videos on all of that on the channel. Thanks for watching.